Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Going to be a little quicker live stream. Got to deal with some stuff today. Welcome. Thank you for being here. Good afternoon, Patrick. Good afternoon, Jacob. Good afternoon, George. Good afternoon, the people hiding behind the scenes. Little smaller audience today. Let's Sue's good evening, APU's world. Hope it's nice over there in London and everything's fine. So, big intraday reversal. Sort of waking up to the fact that, yeah, things are going into a recession, but we got Harker speaking. We got still Logan speaking in a bit. We had Bullard, Bostic. Harker, it'll be some time before the Fed lowers interest rates and data will determine the path. Again, they're not going to lower anytime soon, at least according to them. But the market thinks they will still. Hello, Sashi. So we got the little pullback. We also had the beige book come out this afternoon. What's online for tomorrow? We got Philadelphia Fed manufacturing. Remember, New York Fed manufacturing index took a deep dive. So let's see if Philly follows along at 7:30. We got initial and continuing jobless claims still holding up pretty well. Consensus is for a slight increase over the last one, but nothing substantial. Then we got Fed Collins speaking during the live stream tomorrow morning. We have, of course, the EIA numbers. And where do we sit? We got Brainerd and Williams speaking. Brainerd at lunchtime and Williams after the market closed, but the futures will be back open by then. And then remember, Friday we do have the January OpEx, the big monthly OpEx. So we shall see, and remember, we have all that open interest at the 4,000 strikes. So that's going to get interesting. Market map, there was pretty much nowhere to hide. Today on the reversal. Sectors all down. Consumer defensive, that was actually surprising that was the biggest down sector. And that's normally a rotation into on a pullback like this. But everything getting sold. 95% for that 25 basis points. Still, even with this dip, still in greed mode. We had Alcoa down after the close and Discover down after the close with their earnings releases. Tomorrow morning, we got P&G. Going to keep an look at that from the consumer and inflationary for consumer staples. What else? We have some more regional banks. So, and then after the close tomorrow, we got Netflix. So that's where we stand there. Coco thinks a dip is a gift. Daniel, hey all. All right. Hey, Ted. People just filtering in late. I'm not going to hand out tardy slips. But pull back into the daily rotation zone. Actually, this is the lowest. This wiped out 4 days of closing prices. Still ahead of major support. Major support still is 39.34. We might get a little bounce back. Cycles rolling over on the daily, but remember the 4,000 strike is very, very key. So by Friday, we could get some kind of bounce back move. I'm sort of also watching for a shift in the dollar. Evening, Charles. Why would Bob be on today? It's Wednesday. He was on this morning. And he surprised us. He wasn't on yesterday because of internet issues. Charles says Mark is finally behaving normally. So one day wipes out nearly completely, almost 5 days on a closing basis. And the futures aren't closed yet. But we should see key support still is 39.35. And then technical damage starts happening at about 39.15. We might bounce, but let's just flip this around, the harmonics around in the short term to really see where, at least on the short-term pullback, it's about 38.81 for a retest of December's lows on the key closing basis. Hey, Nas Industry. All right. So Is there any key bottoming signal yet? No, not yet. I'm going to be watching this area to hold between about 39.43 to about 39.33 with the overnight. If we do break down from there, I'm going to 39.14. That would be a little surprising, but that's the next key level. Rally, resistance back at 39.70 right now. All right, and this is just starting to roll over on the daily, getting out clearly out of overbought conditions because this is wiping out a number of days of price action and back below the 200, but only back into the daily rotation zone. So with the real technical damage is down here on this 39.15. Some people look at 3,900 because then that takes us below all the key moving averages again and below some major support areas. NASDAQ wiping out just three days and returning to Wednesday the 11th. Closing area, not even back to the rotation zone. The major on the sand for me is 11,350 on the NASDAQ. Spiking up to that 62.5 and reversing. Pretty big reversal there. So right at some key support levels here. If we do drop down, the next area I'm watching is about 11,400. Little rally, it would be 11. Minor resistance coming in at about 11,541. Major coming in about 11,632. So, and finally, cycles rolling over and getting out of overbought. But I'm going to see if this follows through into the rotation zone today. These kind of moves on the trailing stop base. I've talking about trailing stops on the indices, and this pretty much took out all trailing stops. This pullback. Dow coming all the way back down to the 50. Down nearly 200 basis points. Key support on the Dow back at 33,000 though. So key resistance now back at 33,621. Russell, not even back to the daily rotation zone. Spiking up, hitting that harmonics I put up there this morning, that 1915, and then the nice little key reversal. But major support, we're not even close to it, 1833. Back in here. Minor support coming in at 1857. And resistance now for overnight, I'm using 1879. Again, if you're in late, this is going to be a little quicker. No, Powell having COVID is not the black swan. Unless something bad happens to Powell and they have to replace him, it's not a black swan because somebody has COVID at this point. Okay? I mean, unless something tragic happens, which that would be more of a black swan. That could be more of a black swan event if Powell were having to be replaced, but that's not even on the radar screen yet. Took out the trailing. This is why you keep your stops and you trail. And then you wait. You know, as Coco says, this is a gift for a pullback. I'm going to be watching the secondary reaction, especially after OPEX this Friday. DAX still holding up nicely, but again, closing before the major carnage in the U.S. equities. So I'm going to be watching back to this 15K on a pullback tomorrow. Resistance coming in about 15,330. Notes, big move. We're still in the major key topping zone coming into the 200. So I am going to be watching for a little more upside follow through tomorrow. Remember, we had a potential double, but that is off the table after never even confirming. So nothing to do but keep watching the follow through. And if we get through about 116.07, 117 is the next key target. Dollar index, pretty strong bounce after, again, spiking down. It's getting some buying pressure in here with cycles turning up. Starting to watch for more of a potential bottoming signal in the dollar index. There was definitely a shift today. Definitely a shift from my perspective with some dollar positioning. So remember, dollar index very oversold on a weekly basis. So we could easily see, and I'm not saying this will power to new highs or anything, but I'm saying we could easily return to the weekly rotation zone, and that could be a short-term shift in the markets. Crude spiking up, hitting that 82.57 harmonic. Remember, confirming the double. We needed a close on a daily basis. Obviously did not get the close. So the double is confirmed, but not triggered. Not triggered yet. All right, if we continue to pull back, my key level is 77.56 for some pretty major support area. So I'm still going to be watching for, this is actually good because cycles will be rolling over, getting to the bottom again. We could get a pullback for a few days, but then we'll see. Since this is now a confirmed double, we could then see on the next push higher, we'll be out of overbought conditions. We'll get cycles back to bottom. Not saying it has to happen, but that's what I'm watching for. And then it could make that next run higher. Natty gas also continuing. No bottom yet in sight. Tried to put in some little bottoming formation, now back below key support. The next major area, we're trading against this little area here. But if it breaks below that, there's not a lot more support back down until like, I'd be watching about $3 and 250, 251. Again, that's in trail mode for any shorts. Gold, finally, not much of a pullback just yet. So far, pretty close to sideways correction. Take out overbought, but this is still watching for that bigger pullback there. Copper, big reversal here. Remember, finishing that double pattern. Spiking above that 62.5 and then back down. So I'm watching for. This is already finished. The only thing that would be a resumptive move at this point, unless we get a pullback pattern, would be a close back above the 62.5. But watching for a more pullback in copper with very overbought in cycles at the top. Euro, if we do break down below about this 107.70 level, I'm targeting 107. Other than that, we don't have a strong topping pattern, but it is roughly a sideways horizontal channel. And you see, you could even start watching below about 107.80 for that breakdown from the horizontal channel. The breakout area isn't back above 108.75. Pound, still nothing going on yet. Although this has moved up, so there is a potential double top. That's what I'm watching for longer term. Should we get a more substantial rotation back into the dollar and out of some of these European currencies in the pound, we could watch for that to trigger longer term. Bitcoin, did anybody see that joke of an announcement from the Department of Justice? Like, oh, we're going to release charges. And that was a complete joke. What a joke of a thing to go after. I mean, yeah, fine. But they're like, you had to even announce you're going to have a press conference for such a minor crypto thing. Okay, get after some of these bigger players and their fraud. But, pausing there. Tesla, big intraday reversal. Big intraday reversal so far, filling the gap. But then that's about it. The next key area, if it does pull back, is yesterday's lows I'm watching, because you start getting below is 125 level. I'll be watching for the gap fill to 122. Other than that, just coming out of overbought, cycles trying to roll over, so this could be the start of a multi-day pullback in there. Again, from an earnings, we have outside key reversal day from Alcoa, and then a gap down follow through, but still above breakout support. So if this doesn't hold, this about 50-50 level, you got some gap fills potentially to the downside. This could be a pretty big reversal in Alcoa. Discover. Big gap down. That's a doozy of a gap coming back into this little prior bottoming area. But if this area breaks this 95 area, oh, it could easily retest the 89s. So let's just put up the harmonics on this too. So nothing great there. So we'll be watching the shorter term ones for about 99.63, but on any bounce. But it looks like it's just going to sit here. 96, we should just test that 87.5 then. Good afternoon, Options 22. Now the hardest thing I have to do is sit on cash. Why is that hard? Just wait for your next setups. That makes it easy. Your trailing stops are done. You get to sit on some cash position until you get the next setup. Easy peasy, double cheesy. All right. We do Netflix, please. Netflix, nothing's really changed going into earnings tomorrow afternoon. The only thing longer term is we still have the weekly major double top in play, but that's a long way off from triggering. Short term, your short term levels, your key level you don't want to see a close below for the bull case is 297. Not only would that take it below all the key moving averages, it would then close below the 62.5, which would be a retest of the low area, which could then trigger the double. Other than that, your early warning sign is below 313. That would take out the daily rotation zone, and then the next level is the 50, but the 62.5 takes care of that also. Other than that, there's nothing else. To the upside, if you want the levels for going into earnings, minor 347.55, more significant 353.98, and absolutely major 375.23. George thinks Netflix will have a huge gap. So that's it. If with where this is coming out overbought conditions on the daily and the weekly with divergences up here, if I had to bet, I'd be watching for more of a gap down play than anything. So that's where Netflix stands. That is about it, all that I was keeping an eye on today. Again, tomorrow morning we got P&G, so which is very minor, but it's very interesting from my perspective. But then the big thing tomorrow afternoon is that Netflix. So don't need to keep anybody longer than this for now. We'll have some more things going into the end of the week. And if you tuned in late, remember OpEx on Friday, and that 4,000 is still a key level. And also remember, we are back in negative gamma mode. Remember that we've clearly tipped back, which amplified the downwards move today. We are in negative gamma mode, so again, that amplifies hedging to both up and down. So we could be in still for a volatile couple of days going into OpEx on Friday. Take that into account for any stops you still have, or with entries if you're looking to establish initial stops. I'd be erring on the side of higher volatility rather than lower volatility. You really want orange juice futures. You want them specifically for Here we go. I'm just going to use a continuous contract. Really want your OJ, huh? Yeah, that's really ugly. Wow. There's that's an ugly pattern. Just looking at this because we don't have. I haven't traded orange juice in forever. In forever. And I remember why. Ugly patterns. Wonder where we stand with these harmonics. I'm just working up the charts. Sorry for not. All right, here's, I mean, the key support area. We break down below between 199.60 and 198.20. I'd be watching for a pretty quick decline back to the 50 to 62 and a half with the rising 200 in the middle. And this was a significant area on a weekly. So that would be my key target on any breakdown. Other than that, for the bull case, since everything's gone sort of this flat and choppy, you need a close above 215.70 to resume a bull case. But this looks like it's trying to put in a pretty substantial topping pattern at the time. Some people might try to trade this as a very sloppy head and shoulders. I'd just be using these harmonic targets instead. That would be the key pullback area for any shorts. And I would not get bullish unless we close above that 62 and a half from this most recent down move. But that's where that stands. For your OJ futures, how many other YouTube live streamers are doing OJ futures on request? Just wanted to see the damage. Supply checks. This thing looks like it's going to be poised for a breakdown. But if you're itching to trade OJ, there you go. There you go. With that, we will leave it at the OJ futures to wrap this one up. Keep it nice, short, and sweet. I'll talk to everyone tomorrow morning. Remember, unemployment numbers out at 7:30, so don't get caught off guard. I mean, if there's a big miss or beat, if it comes in line, not expecting much, but if there's a big miss or beat either way, could lead to some of this volatility going into OpEx. I shall talk to everyone later.